Okay, quick update here on the US dollar index. Haven't made a video about this one yet, and now I'm going to. So, impulse off of the low. Okay, subdivides is a third wave extension. All right, you have multiple guidelines for that, but it appears to be the overriding guideline for this is that since the second wave is of the zigzag family itself, that you should expect somewhere around a 61.8% retracement. And as we pull this out to the top, you can see that we hit 61.8% right on the button. Multiple ways to count this, but I'm choosing to count it this way because it subdivides better, I think. So just 3 zigzags. W, X, Y, X, Z, zigzag, 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 zigzag. Okay. X waves can be anything they want to, but all of these waves must be zigzags, and they all are. And since that 61.8% bottom here, it appears, okay, and this is the 4-hour time frame. I can drop down a little bit. It appears that we have a 5-wave move. All right, should be 1, 2, 3, 4, 5. Okay, and the expectation then is that since this will also be a second wave itself, that you're going to get a 3-wave retracement such as this. Probably find support right in here, and then you're off. You're off to the races. Okay. And a couple of reasons I'm counting this as a double zigzag, right, is I can't get this to cleanly subdivide as a zigzag on its own. I can very clearly see 2 zigzags, and evidenced by the reaction, the 5-wave reaction here, usually you'll get a 5-wave reaction that breaks the previous 4, right? Which, if you were counting this as a 4, is going to be somewhere in this neighborhood. But we didn't get that. What we got, okay, this is the second half of a bigger zigzag. Okay, zigzag being here. This should subdivide as 5 waves, and it does. Because you got right here, 1, 2, 3, 4, 5. Okay. Now what we did get is a 5-wave reaction from the low that is right beyond this 4th wave. Okay. So that's why I'm choosing to count this as a triple zigzag as opposed to anything else. All right, but we do meet the guidelines. But you can't trade the dollar index, right? I'm going to give you a little tidbit of information here. Some people think that the dollar and the stock market inversely correlated. They're not. Okay, there are long periods of times where they are, but overall, they're simply not. And I can prove that easily. What I'm going to pull up is an indicator here. It's called the correlation coefficient. And I'm going to pick, you can pick any index for stocks, but I'm going to pick the S&P 500 for no particular reason. But that's what I'm going to pick. You can do this yourself. You can pick any index you want to. You'll find the same result. Okay, so this is an hourly time frame, right? So if they were inversely correlated, then what you would expect is to see this blue line here. Okay, this is the 0 line, which means that anything above the 0 line, they're positively correlated. Anything below the 0 line, they're negatively correlated. So if the stock market and the dollar were negatively correlated, then you would expect to see the majority of this blue line down here below 0. And as you can clearly see, that's not the case. It goes through periods of positive correlation to negative correlation to positive to negative. And this is just the hourly time frame, right? I can change to anything you want. We go to the daily, right? Okay. We could see that most of the time here, at least in this time period, it's been negatively coordinated, but there are periods of positive correlation. Okay. You go back to other periods in time, all right, back into 2014, 15, blah, blah, blah. Not the case. I'd say that's about 50-50 for a long period of time. Right? You go back in other times of history, then you got a period of negative correlation here between '09 and 2013. Before that, not so much. All right, for a very long time, not so much. Right, so to blanketly say that the dollar and the stock market are never really correlated, it's simply not true. But what we can say is right now it is. Okay, so if the expectation then, okay, if you expect this current correlation to continue, then if we're expecting now the dollar to go up, which the count here supports 1, 2, and then it's bottomed, well, that means that if this negative correlation is going to continue, then the stock market is therefore topped. Okay? But you can't throw all your eggs in that basket because there is no true correlation. But there has been a mostly negative correlation since, about 2020. Mostly negative. I'd call that maybe an 80-20 split in that neighborhood, right? Since 2020, before 2020, not so much. 50-50. It's your best. Okay? But what we can do here is, since you can't trade the dollar index, which you can trade, and you can't rely on this necessarily to give you an indication of what the stock market's going to do, unless, of course, you expect the current correlation to continue, um, is to find something that is negatively correlated. So let me show you what that looks like. Let's look at the euro and dollar pair. Now this is what you would expect to see from a negative correlation. You can see the entire history. I can go to the freaking weekly chart. Okay. The entire history, albeit just a couple little spikes back here in the 70s, the entire correlation of this index has been negative its whole life except for a very brief time in like 1975. That's a negative correlation. Okay, so if you want to trade the dollar index, then in reality what you want to do is trade the euro. So let's look at the euro. Okay, so here's an hourly count of the euro. Exactly the opposite of what you would expect because it is negatively correlated. I got a couple minor counts in here just working things out, but I counted this slightly differently because although they're inversely correlated, they're not exactly the same. And what I find here is a double zigzag instead of a triple one. Because I can subdivide this and this into 5 waves, so therefore I can get a zigzag here, ziggity zag, an X wave, okay, and I can get a zigzag here pretty easily. I'm sorry, a 5-way move here pretty easily. Let me get that thing out of the way. There we go. 1, 2, 3, 4, 5. 5-way move out of there pretty easily. A B wave, and then I can get 5, 3, or 1, 2, 3, 4, 5 here. Okay. You can probably count it as a triple zigzag as well if you really put your mind to it. And if you do, that's fine as well. Okay. But as you can see, we're getting the same result that off of this high now, okay, we have now broken the structure in 5 waves. 1, 2, 3, 4, 5. Therefore, the expectation is that you're going to get a 3-wave pullback. All right, so in 5 waves, you get a pullback in 3, something like this, thereabouts. And I have lots of techniques to actually trade this, which I go over in my Discord. I'll go over lots of things in Discord. Okay, because Zigzor's hot and popping. But when this ends, this three-wave move, wherever it is, here, here, way up here, I won't have an entry from my Discord members. Okay, but that is the expectation: is you get 5 down, 3 back. Okay. Now there is a glaring other possibility here, because when structure breaks, as I've gone over in my other videos, okay, it's either the end of something, all right, or it's just a bigger move. So there is a possibility on the table that that 4 goes there, okay, and that this is just an expanded flat for a 4, and then you are going to get another. Okay, but it's not required. Okay, but it is possible. Because that's 3, 3. You can make that a zigzag, even though it looks like 5. Almost any impulse on this scale will look like a zigzag as well. If we really zoom into it, all right, if I had to count it, it looks like an impulse to me. Got 1, 2, 1, 2, 3, 4, 5, 3. This looks like, what we got here? Either a triangle. No, it can't be a triangle. A, B, C. Yeah, I can. Triangle, or it's a flat, right? So you'd have your 4 here and your 5 here.